Right now, the entire investing world is kind of just trading sideways. There's really not a lot of direction one way or another when it comes to opportunities in the market. Mind you, it's been a little bit since we did our last video, but we're going to try to get back to a bit more consistency. And when you're taking a look at where things are right now for crypto, where things are right now for the stock market, where you look at where things are for gold and silver, where you even look at where things are for the likes of oil, things are just kind of not really going in any direction. And I think a lot of that is due to the fact that a lot of people are waiting for closure, especially with the details of the Iran war. As that continues to progress, there's continues to be a level of uncertainty into putting too much risk in one asset or another, because the war ending is going to have a cascading effect on certain assets. The war continuing will also have a similar effect, but the bigger question is how much longer will it continue, and the implications for different markets being really contingent on how much longer it lasts. So we're going to talk about all of that and more in today's video. Look at what are the two opportunities right now that you should be considering, even while most other assets are somewhat stagnant or not really going in one direction or another. We'll talk about in today's video. If you're new here, my name is Alex. Talk about crypto news, crypto passive income. If you enjoy content like that, consider subscribing. Enjoyed this video, smash up the like. Without further ado, let's in the video. So let's first take a look at Bitcoin, because there's something really weird happening right now when you look at Bitcoin, and more specifically Bitcoin and the emotional investing that is happening behind investors. So the emotions that are driving investors is in a really weird scenario, because you would think a lower price Bitcoin, there would theoretically be more fear in the market when the price of Bitcoin is below $70,000. But what is ironic to me is where we are right now with the price of Bitcoin. Mind you, if this is going back to November of last year, this is not really that long ago. This is about 3.5 months ago. Bitcoin was at about $85,000, and the fear and greed index for the very first time in its history was at 10. Now, mind you, Bitcoin was at $85,000 at that time. Now, when you take a look at Bitcoin Fear and Greed Index today, sitting at 25, more than 2.5 times, or essentially 2.5 times what that point was in November of last year, and we're below $70,000 Bitcoin. So it just kind of begs the question as to how much does fear and greed, how much does the emotional side of people play a role? And I think part of this is also a psychological standpoint. People are already past the extreme levels of fear, at least currently, because essentially sellers have gotten exhausted. There's kind of that time frame when you look at the psychology chart of an investor. It's kind of in that period of a very low where people are kind of like, maybe this is the bottom. This is just like, you just kind of get tired of red days. You get tired of losing and watching your money disappear. And essentially, people just kind of get numb to it. So when there is a time, the initial fear, obviously here, was from a dramatic drop from 110,000 all the way down to 85,000, causing a lot of panic. And mind you, now that people are starting to kind of get desensitized to like, okay, it's down, it's at $70,000, just another day. There's a lot less fear in the market. So I don't necessarily know if that's a good thing, if it's a bad thing, because the more complacent people start to get, and the next macro event that occurs could cause a much further retraction in the price of Bitcoin. And I think that's kind of the fear that I have, at least moving forward, because people are starting to maybe not be as fearful. They're kind of used to this price point. And so if it dips a little bit, not a big deal. But then when it really starts to dip, I think we may see another drop down to the teens in the fear and greed index, where emotions start to get really high when we go sub 60,000, if we go to $50,000 Bitcoin. So something to keep an eye on, especially as we're kind of in this really much sideways channel right now. This is on an hourly chart. We can't break above, we can't get to 75K. We're holding steady really weirdly at this 63K mark. And we're not dipping below it. I mean, we had this one time where we went to 60K, but ever since then, even when we did dip down to double bottoms here at the 63K mark. So, even then in the last descent, we only went down to 65, 66K. So maybe we're starting to create a little bit of a bull here, and maybe we start to slowly retrace. And if you're going to be bullish on this year, to where we slowly retrace back to higher levels. And that would be really contingent on breaking above this area where we've already seen resistance. Right now, there's really not, like I've talked about before, there's really not a lot of positive things. There's not a lot of hope. I think the one thing that could spike the price of Bitcoin is the Iran war ending. I think that could be one of the things that could spike the price of Bitcoin, and it could take it to 75K. But the bigger question is, would it last, or would it then sell back off? Because that's really the only major catalyst that a lot of people are waiting on. And obviously the whole Ukraine-Russia war, that's kind of been going on for a very long time at this point. So there's really not a lot of hope in that instance for this year for that to be being finalized. And in fact, that could be sped back up as spring comes around in a spring offensive possibly coming. So there are things that are negative, and very few things that are positive. And even the whole Iran situation being over would be a very, very short-term relief. And I don't know how much that would sustain a Bitcoin rally simply on that occurring. Now, the other thing that has been making a lot of headlines obviously has been the price of oil. And this is kind of one of the things I talked about at the intro of the video, is the longer the war drags out, there are going to be some assets that are going to benefit from it directly. For example, the price of oil. I think if there's certain actions that aren't taken by the government, by oil producing countries out in the Middle East, I think it looks like most things have died down from Iran specifically. But this did go all the way down up to $120. I think there's potential for it to go to 150. Right now, we're on a 200 a day exponential moving average. So we found support right here on the hourly. You can see that retracement. But I think if the war continues, if oil prices, gas prices continue to increase, there's a lot of potential for this to go higher. But the one thing that is going to take this back down to where it was before this entire situation started, I mean, we're talking about a significant drop. Let's just put this in a little bit better perspective to better understand, what the impact is going to be, how dramatic of an impact is going to be when the war is over. Because the war continuing and the end date for the war is kind of an unknown, right? And so that's the problem, is going long or going short in any instance when it comes to oil, you're putting yourself at a lot of risk either way. Let me just pull this up here. Let me go here. Oil. See here. Nope, that's not what I wanted. Futures. There we go. So if we look at this, right, this is on a daily basis, right? Oil was, before all this happened, at $54, $55, spiking all the way to a top of 120. There's a lot of room to go down. If the Iran war is over, oil is to retrace all the way back down, that is a 30% drop, which is a significant drop in such highly valued asset. So that is the thing, right? You're putting a lot of risk into trading oil. And so not a lot of people want to trade it, because the war could end theoretically by the end of this week. And the US says, hey, we're done with all these strikes on Iran. We're happy with what we've accomplished. And then at that point, oil prices would then come back down. And they've gone up so much that the fall is going to be that much more difficult. But who's to say that the war ends this week? The war could continue. I mean, there's been speculation the war continues into September, which would be insane, and it would be very, very painful at the gas pump, which would mean more than likely the price of oil continues going up. But that is the level of uncertainty that's causing things to one asset over another not to move very, very strongly in one direction. I think this was just due to a cool off, but even then we've not seen it break above. I mean, we're talking about this being since the last I mean, we're kind of slowly starting to stay in this channel, but there's not a major move in one direction or another. When you look at other assets, silver itself, is not being able to break above this $95 range, not going back up to $123. So we're kind of seeing a similar, I think oil may start to play out very similarly how silver is right now. When you look at this S&P 500, no major directional change. It has cooled down from here at 698 and is currently sitting at 677. But that's not a drastic change from where it was. And so I think there's just a ton of uncertainty in the market. It's only down 2.6% in 1 month. And mind you, even if we break this out even further from where it originally hit, this is in the course of 2 months. It's only down 3%. So there's almost no movement, no specific directional movement in a lot of the markets. And so people are looking at a lot of the aspects, a lot of things are happening around the world. And I don't think people can, obviously very early on, and I mean, just looking at this as an example, right? This is silver. This was an incredible rise in silver. This is just in November of last year, where silver had gone from, had increased 143%, right? You see oil, a clear winning trade, silver, a clear winning trade, Bitcoin, the clear losing trade right now, and in the S&P 500, SPY, really not, kind of more or less sideways. So I think it's just a lot of uncertainty that's happening, that no clear direction exists for the best assets to invest into. And I think the big thing that most people are waiting on is the Iran war to be over, to kind of get a direction of how these different assets are going to react to that. Obviously, you're going to have your military stocks that are probably going to sell off a little bit, as obviously they've made a boatload of money, billions of dollars, with the equipment that they've sold. But obviously that conflict being resolved kind of has a negative impact to their bottom line. When it comes to the aspect of silver and gold, typically assets that people turn to during times of uncertainty. Well, how are they going to react when the level of uncertainty of the Iran war is over? How is oil going to react when there's no longer going to be the fear of, a lot of these oil producing companies, their oil refineries being hit? So it's just a lot of things that could be negatively impacted by the Iran war being over. And I think Bitcoin is definitely one of those assets. And so with that in mind, I want to take a look at something that has been catching my eye that I want to talk about, that I've been doing a lot of research on for the last couple of days. And that is what we're seeing with some of these Bitcoin mining companies transitioning into what's called a NeoCloud company. NeoCloud company is a new category of specialized cloud service providers that focus exclusively on providing graphic processing units as a service, GPUs as a service, to meet the intense computational demands of AI, machine learning, high performance computing. So unlike traditional hyperscalers, they offer a broad range of services. NeoClouds provide near metal or bare metal access to the latest NVIDIA GPUs and specialized networking, offering faster access and often lower costs for AI training and inference. Now, why is this important? Well, you have a lot of these companies, these Bitcoin mining companies, who have access to Bitcoin miners, which a lot of them are very unprofitable compared to Bitcoin's all-time highs. But the true value that they have is the infrastructure. Infrastructure is where the value is currently there, and the fact that they have access to power. And that is exactly what data centers need. And data companies need access to power. And instead of buying that, investing into that, a lot of these from the AI company itself, the Bitcoin mining company can transition, which is why I think we're seeing a lot of these Bitcoin mining companies also possibly selling their Bitcoin. You're seeing this a lot on their headlines. They're looking to move and liquidate a lot of their Bitcoin because I think of the success that we've seen in Irene. Now, Irene has retraced a little bit, but Irene is a stock that is really one of the pioneers transitioning from only Bitcoin mining to utilizing its using its infrastructure, its access to energy, and the infrastructure has built out to convert to be a NeoCloud company. and that is substantially more profitable than currently mining Bitcoin. So these companies are transitioning to become very, very profitable, and they're essentially like what is that bird that comes out of the ashes? Whatever that bird's called, right? A phoenix that rises out of the ashes, right? That is what I think a lot of these companies could potentially become. A lot of these that were strictly Bitcoin mining are going to start experimenting and moving over to being neo cloud companies. I think it's going to be a term that's going to be a lot more popular, especially as the demand for AI continues to rise. So keep an eye on companies like Irene on the daily chart. It is sitting at its 200-day exponential moving average, so high level support, not to mention when you take a look at this support anyways, it's coming very, very close to where it bottomed out here in December of last year. So this could be a good trade to be placed right around the $30 to $33 range, as it's got some support and resistance from back here before it went higher. But I mean, you're looking at this being at one point at $76, which is insane. And obviously retraced a little bit. But I think this is going to be a direction where a lot of focus is going to be. AI is continuing to be a huge direction. A lot of those have retraced, especially as the entire S&P 500 has also retraced a little bit. Nasdaq has retraced. A lot of stocks have retraced, but I think these could be good entry opportunities for a lot of these players when you're looking to get more exposure than just the likes of Nvidia for a AI company, because Nvidia is already massive. So when you're looking at opportunities that are up and coming, looking at opportunities like Irene, looking at opportunities like these two other companies called Luminum and Coherent, these are two that recently received $2 billion each from NVIDIA as part of a strategic multi-year partnership. This is going to be for this would have to be a separate video, but essentially this is NVIDIA investing into the future of data centers by these two companies. This is why if you look at these two companies, they have done insanely well in the 1 year return time frame. I'm just going to pull up one of these. Let's just pull up Light. I just want to give you an example of how well this stock has done. And there's a reason for this, right? This is the future of what AI is going to look like as far as the technology of data centers and how data is transferred. This is going to be very, very, very massive. This is a transition from copper to light technology, using actual light to transfer data. So very, very impressive technologies. This is really, it's bottlenecked. It has a tremendous pipeline in demand, and more demand than they have supply and capability to meet that demand. This is why you see the likes of NVIDIA investing $2 billion into each of these companies, and why I think, diversifying is always important. You look at not Light, you can also take a look at, let me pull up the other one, just to show you, both of these have also retraced a little bit from their all-time highs. This is a daily chart, $300 sitting at 260. Light also had retraced, but these charts are almost up only due to a lot of the potential. And I think these are the charts that a lot of people are going to be paying attention to, because this is when you're looking at the future of AI, we're seeing a little bit of a retracement, but people are looking at what is next. What is the next 5 years going to look like? What is the next 2 to 3 years going to look like? And I think you're going to look at neocloud companies, especially as bear market continues. That's going to be absolutely huge. And on top of neocloud companies, you're going to see companies like Coherent, and the likes of what you see with Luminum being very much pioneered in a lot of your AI companies utilizing their technology to increase their efficiencies. So I think those are the three stocks that I'm paying attention to. Some of these have a role in the Bitcoin mining space, to likes of Irene. And I think the biggest thing is infrastructure, access to that infrastructure. And I think a lot of people aren't familiar with Irene. A lot of people just associate Irene with Bitcoin mining. But they recently had, in November of last year, they signed an agreement with Microsoft. There's a lot of things that they've done. They just had a 1.2 gigawatt. Talks about it in this article here. They had a 1.2 gigawatt site that they 1.6 gigawatt land in Oklahoma, increasing its total capacity. So there's a lot of very positive things. A lot of these things have retraced. through the entire markets, as there's just a lot of uncertainty about what's next. But I'd love to hear your thoughts. Have you heard of the term NeoCloud? Have you looked at, have you heard about this NVIDIA investment? What are your thoughts on things moving forward? Let me know in your thoughts in the comment section below. Enjoy this video, smash the like, enjoy content like this, consider subscribing. Until next time, guys, stay invested.